In this video, we are going to figure out the cost of goods sold as a percentage of revenue. I told you guys this video was coming. I think it's very important to take note of just how high the cost of goods sold is. And if this continues despite Aitx's revenue growth, I mean, how is this going to be ever profitable? So let's start here. I pulled out this cheap calculator that comes with Windows. So you'll notice in 2023, 2.23 million in revenue, 2 million in cost of goods sold, 1.33 million, 1.16 million, pretty close. Cost of goods sold pretty close to the revenue, right? It was actually less in 2021, 1.45 million in total revenue, cost of goods sold 700K. I'm rounding down or up a little bit, but let's start with 2023 because that's the closest we have here. We do the math and we do the division here. So we're rounding up. So 2 million, right? 2 million divided by, what is it? 2.23. So, and then we add a bunch of zeros here. There you go. And that equals 0.89. Ouch. So you just add times 100 and you get your percentage. So let's round that up to 90. 90%, which is pretty bad. 90, is there a percentage here? It's not going to add a percentage. My bad. I thought I was going to add a percentage in front of the number. So 90% of the total revenue is cost. It eats into the revenue. That's oh my god, that's a lot. That's what? 90%. I thought it was going to be like 70%, maybe 80 at most, not 90. That's like okay, so for those of you who don't get what I'm doing here, let me break it down real simple, okay? So there's a hot dog stand, and I sell my hot dogs for $1. $1, okay? See, a big one here, natural number. Wikipedia apparently has, apparently that's what pops up. $1 hot dog, right? Okay, $1. And then, but it cost me 0.90 cents. Apparently 90s hits, greatest hits. Okay, I mean, I'm going to check that out later, see what that's about. But 0.90 here, 90 cents, that's how much it costs for me to even get the hot dog out there. So I turn a profit of 10 cents per dog, right? Right? Because as a percentage of total revenue, my COGS is 90%. That's quite a bit. That's high. So unless I'm going to charge more for my product, unless I'm going to charge more or bring the cost of goods down, it's going to be difficult to be profitable because this is my profit right here. Not even profit. This is my revenue, 10 cents. This is my revenue, not including, by the way, this is my revenue, not including, oops, no, I can't move that. What am I doing? What are you doing, Shades? That's 10 cents per dog that I make, but after expenses, I get destroyed, and then taxes on that 10 cents, which sounds ridiculous, right? But again, I'm just trying to keep it really simple. Hot dog stands. I've been eating hot dogs. I guess that's why. But someone's gonna make a hot dog joke in my mouth, I'm sure. But yeah, how can you ever be profitable unless you bring down your cost of goods sold? It should not be 90% of your total revenue. Number one. Number two, your operating expenses are you're just never going to be profitable. I'll be selling hot dogs and you'll be getting a good deal. Hey, look, Shade's dog cart. Look at that fool selling hot dogs for $1 just to make 10 cents and then minus operating expenses, because I got to pay myself and I got to buy back the supplies to replenish, all the buns and everything. It's just the operating expenses would destroy me. Like I would just never make money. I would just be losing money at that point. And I'm not in the business of losing money, so Shade's hot dog stand would just completely. I would have to charge you $2 or $4 or who knows how much. I think buns are like what, $4, and wieners are what, like another $5. I think Polish dogs are more. I guess it depends on the brand, but let's say it's like $10. I think, right, for hot dog and buns. Nah, it would just be my hot dog cart stand would just Shades dogs, Shades Red Hots, whatever you want to call it, would just get destroyed. You would just see me go, yeah, I didn't turn a profit, guys. See ya. Like I'm gonna go back to the stock market. Hello, Nvidia. I'm gonna just put my money in. I'm just gonna invest in Nvidia at that point. Like this is a losing. It's not a good business. So that's high, 90%, by the way. Let's check the previous year just to make sure, but that is pretty high. Because once you include the operating expense, it's just how is this ever going to be profitable? How? That's what I'm asking. Okay, so 1.33. All right, 133, and then a bunch of millions. Oops, I did this wrong. It's supposed to be the other way. So 116,345. Divide that by 133, and a bunch of zeros, and it's actually 87%. For 2022, the percentage of total revenue that is cost of goods equals 87%. So if we round it up, it's still 90%. I'm not going to do it for these other years because this is actually like 50%. You can kind of just eyeball it, 1.5 million, 7.5K million, 7.5K. That's like 50%. It was lower actually in 2021, but I guess they started growing in 2022, 2023, and yeah. But it was still high in 2019 and 2020. It was still up there. Like, it was still pretty damn high. But now it's even higher. For 2 years now, we've had an almost 90%. The cost of goods sold eats up. Like it eats into the revenue quite a bit. Like, it costs too much. They have to bring that down at some point. I don't know how they're going to do it, but they better bring that down because if it stays at 90% plus or even 80% plus, your operating expenses are so high here. Look at those operating expenses, by the way. Your revenue is 2.23 million. Okay, and your operating expenses are 13.66 million. Whew, I can't believe I'm gonna do this. This is horrible, but there you go. Okay, so we're gonna divide that by. This is so bad. There you go. Okay, and then we multiply. Really, I'm gonna multiply this by 100 and 612%. Is that what? Maybe I did something wrong. Is this correct? Sometimes I question myself. 612. So yeah, that makes sense actually because it's 2. Yeah, it is correct because you multiply this by 6 and yeah. So 612%. The operating expenses are 612% of the total revenue. So your revenue has to skyrocket while also trying to keep your cost of goods sold down. But we assume that their operating expenses are probably going to go up as they continue to get more product out there and do any kind of expansion. Maybe they get a new building, more buildings, because they need to meet the demand that's going to be there in the future, assuming they continue on the track that they're on. Because here in 2019, 2020, the cost of goods sold, the operating expenses was 1.87 million, 3.14 million, and then it skyrocketed in 2021, and it stayed in the high 13 million range since 2021. So that seems to be a pattern there. Their operating expenses, I wonder what's going to happen with those. Are those going to go down as they grow? I doubt that. That's not really how it works. Like, there's so much demand for your product that you spend less. That's not how it works. You got to spend more. You got to spend money to make money, right? So if this pattern continues where you have your cost of goods sold be 90% of your revenue, and then you have your operating expenses be 600% of your revenue, then that is, I just gave you the math, guys. You do what you want with that information. But really the biggest problem is the cost of goods sold. You can't be selling no hot dogs for $1 and only making 10 cents on each one because your cost of goods sold is so high. And then after operating expenses and taxes and everything else, you end up net negative. That's what I'm seeing here. If we're just looking at the raw numbers, obviously this isn't taking into account, other things. We're just looking at the math here. We're just looking at the numbers here on the financials. Nothing more, nothing less. So, we just looked at the operating expenses. That is quite the operating expenses. And let's look at the quarterly. I was about to end the video here at 10 minutes, but let's look at the quarterly real quick. Total revenue, 1.18 for Q1 2024. Gross profit. Okay, I don't care about gross profit. Operating expenses, 3.42. What was last year? Last year was 307, so it did go up. And then what was what's the cost of goods sold? Cost of goods sold relative to last year. Cost of goods sold doubled actually from Q1 2023 to Q1 2024, because it went from 259, or let's round it up, 260 to 600. So it doubled actually. The cost of goods sold actually doubled compared to Q1 2023, which is not what you want to see. Which is not what you want to see. Like, you, oh my God, you guys see this Q4 2023? Look at Q4 2023, 859K in revenue. Cost of goods sold 1.09 million. What the? Operating expenses are super high. Yeah, it's like their operating expenses have, they're literally like 516% of the total revenue. So we'll see what happens as we go along here. But wait, is that I'm a Barbie World? Where is it? I just saw it. Yeah, I haven't seen that one in a while. Oh wait, no, that's not it. I think. Who knows? Smells like Teen Spirit. That's it for the video, guys. Hopefully you enjoyed the numbers. If there's any other numbers you want me to look at, let me know in the description below. In the comments below. I will see you in the next one.